Hello and welcome. You're watching First Stick here on News 9, where we bring to you the morning buzz on the Lal Street. I am Sayash Maheshwari and with me in the studio is Amit Ranjan. It's a Wednesday morning and the markets here in India, they continue to correct. Nifty has now fallen over 550 points from its record high of 22,794. Nifty Bank on the other hand has fallen nearly 1850 points. I mean, we are approaching some crucial support levels for our markets. But before we delve into that, let's look at what we got in terms of a handover from the global markets. Amit, over to you.
Dollar gain, but it was a sluggish Tuesday yesterday in the West. Nvidia, Tesla, Starbucks, Disney, all were down. Dow Jones closed in the positive slightly at 0.08%. Like I said, sluggish. S&P 500 in the positive at 0.13%. Nasdaq slightly in the red at minus 0.1%. Coming to the European markets, they did well. They closed in the positive. The Stock 600 closed in the positive at 1.14%. Asian markets today are sluggish again. Hang Seng this morning is in the negative, marginally at 0.03%. Nikkei is down by as much as 1.39% following the tumble that Nintendo experienced in that market.
All right, and I mean, as far as the global markets are concerned, I think there is not much to worry about. What we are seeing in the last 3 or 4 days is that Indian markets, they have sort of decoupled with the global markets because they have the global cues, they have been essentially healthy if you look at it. S&P has seen a strong resurgence from the lowest levels that we saw previous week. Your other global cues, I mean, if you talk about Brent crude, that's hovering around that $83 a barrel mark. Your 10-year is essentially under 4.5%. It was inching towards 4.7% and beyond. And the dollar index is still hovering in that 105, 106 sort of range. So overall, the setup as far as the global cues are concerned is positive. The handover is also positive. So I think the correction that we have witnessed in the Indian markets in the last 4 days has to do with some of the local factors. Look at the look at the cues that we are in. We are in the middle of the 4th quarter earnings season, and again, that has not been something to write home about. They have been essentially a mixed bag. Again, we are also witnessing the low turnout as far as voters are concerned for the Lok Sabha election. So that is perhaps also giving some bit of jitteriness to the market participants as well ahead of the the results on June 4th. So the overall setup as far as the global cues are concerned, I think we are not deriving much from that. The markets have sort of decoupled and is focusing on the local risk factors. But again, we have fallen quite significantly from the recent top, from the recent record high we made of 22,794, about 550 points today. Where do we go from here? We are approaching some key support levels. For that, let's also bring on board Mr. Brijesh Iyer of IDBI Capital Markets. Brijesh, thank you for joining us here on News 9. Always a pleasure speaking with you, sir. Nifty again has given up almost 550 points from the recent top. We are approaching 22,000 levels once again. We are about 250 points shy of it as we speak. But considering the sharp correction that we have seen, it looks like 22,000 could be where we are heading. Also, I mean, India VIX has spiked quite sharply from 10 odd levels to about 17 now. What's your overall assessment of the markets at this current juncture? Where do we go from here on? Is the bottom approaching, or we are still to see more correction from here?
Good morning, Suresh. So as you said rightly, the VIX is rising. So that is one of the reasons why we are seeing a lot of volatility in the market. And I do believe this for the next, till the elections, the counts and everything is over, this is going to be the picture for next 10-15 days. We need to be cautious on the market. Technically, we are seeing the distribution. There has been selling pressure in the market for sure. And what we can say right now is the uptrend is under pressure. So what this says ki for the time being, whatever the levels we saw, 22,800, that is going to stay as the high, immediate high. And for the timing, maybe at least for the next couple of days, maybe this week or maybe the following week, this level is going to stay as the resistance zone. Yesterday we broke the 50-day moving average at 22,300 marks. So I believe this is now going to from today and tomorrow's point of view, this 22,300 might be a resistance zone. Some pullback is expected because, as you said, more than 500 points we have followed in the last 4-5 trading session. So some intraday bounce can be there, but directionally, I have a sense that we might go back to 22,000 level. Only if 22,000 level is broken, then we'll review it further. But then from 22,800 to 22,000, this should be the range for the market. And the expectation is that maybe today, tomorrow, yeah, maybe sooner or later we might break this level also, and 22,000 is approachable. So whether the market finds support or not, we'll take a call at those points. But yeah, definitely we can talk of another 250 points from the current level is what I sense.
All right, and shifting focus to Bank Nifty, I think that has been a major driver of the market in the last few months. I mean, both on the upside and on the downside, it was leading the charge when the market was making a record high. Even in this downfall, Nifty Bank has corrected almost 1900 points. We are back at that 48,000 mark, Brijesh. And we are seeing weakness across counters. I mean, all PSU bank stocks ended in the red yesterday, and the big ones, ICICI Bank, HDFC Bank also contributed to the downside. I mean, looks like it's not over for Nifty Bank just yet. What's your take, sir?
Suresh, Bank Nifty, that 48,000 was a big trigger eventually during the expiry, and we broke 48,000 and we are now staying above 48,000. So, from the technical perspective, Bank Nifty is still making the heart of high bottom structure. The swing low is 46,500. So, if trend has to change, that 46,500 needs to be broken. Right now, what we can say, the value of 50-day moving average, which is 47,500, which is another 500, 600 points from the current level. That is what I can sense. Market Bank Nifty might come close to 47,500. That is the maximum correction as of now. For me to change the view, it will be only when we see a strong close below 46,500 on a weekly closing basis. Only if I see those levels, then only I'll take the U-turn for the Bank Nifty. Because somewhere from the monthly structure, 51,000 and the Bank Nifty 51,000 still looks promising. But then since the market is correcting, I don't want to bet right now. I would like to find the support. And right now at this structure, I think 47,500 will act as a support. If that breaks, then I need to review. But more or less, I'm pretty confident that 47,500 will be acting as a support zone. Let's review it when it comes to those points.
All right.
Good morning, Brijesh. Now, Dr. Reddy's Labs announced their Q4 results yesterday, and their profits have jumped by as much as 36.3%, revenues up 12.5%, EBITDA up 14%. They have a first mover advantage in the blockbuster cancer drug Revlimid, which has contributed to more than almost 100 to 115 million dollars to their Q4 revenue. But their stock is down. How do you look at Dr. Reddy's right now?
So purely from a technical perspective, it is an uptrend. The structure for the weekly and monthly are quite strong, positive. I think this should be viewed as a buying opportunity. Dr. Reddy on the long-term bet, it can easily go back to 6,500 mark. On the lower side, the value of this 200-day moving average is 5,800. This is the lowest support zone. So I think today somebody who wants that directional view should make the 50% entry at current price, and maybe when it breaks 6,000, a little bit 50, 60 point plus minus, I strongly believe we should be taking a long trades. It will take good amount of time because overall the trend is not that strong. But then with the directional view, I think this should be an opportunity to take the long trades.
All right, and another stock we wanted to pick your brains on is Reliance Industries. I mean, we have been talking about Nifty Bank being this major driver on the downside, but Reliance Industries, I mean, the kind of movement we have seen in this counter in the last 4-5 sessions, I mean, it has fallen by about 4.5% or so, whereas Nifty has corrected by 2.5%. This morning, we are seeing some bit of a bounce back in Reliance Industries. Brijesh, my question is, could Reliance Industries be that swing factor which can, take or which can make at least a bounce back happen for Nifty from here on? Because that again, it's a big, it has a big weightage on Nifty.
Suresh, Reliance, clearly from the technical perspective, if you see over the last, from the entire April month, so the supports for the Reliance are 2870 level. And there has been a range breakdown in the Reliance industry. So my sense is that even if the Reliance sees some bounce, it might get stuck at 2860, 2870 levels. And right now it has broken the prior swing. So technically it is in a downtrend or maybe in a slight corrective mode. So pullback might be there because it has seen a continuous fall. But then directionally, I have a sense eventually before all this happened, the buying came from the levels of 2700 mark. So I have a sense, maybe not exactly 27, but then whatever the low we saw, 2784, I think that low will be broken one more time. So, and after that, whenever it form a base, we should take a call. So maybe below 2780, we can talk about another 50 points correction. So I would be be okay to take the view only when it comes to 2730, 2750 mark. Pullback might be there, but I believe closer to 29,000, 2900, again, it will face a resistance and then it might see some further selling.
All
So
right.
at least, yeah, little bit weak at 10 days, we will be bearish.
All right, and before we let you go, sir, one more stock we have our eyes on this morning, and that is Voltas. I mean, Voltas has seen a significant rally in the last 3-4 months on this theme that the summers are going to be hotter this time around, and the stock had done phenomenally well. But the results came out. The numbers were weak operationally, a very weak quarter for Voltas. They have reported about a 19% drop in net profits, and we have seen that play out in the stock prices as well. It opened gap down about 8% lower, has recovered since then. What's your take on Voltas? I mean, will we continue seeing correction over there, considering the kind of rally that it has changed in the last 7-8 months? What's your take here, sir?
Suresh, Voltas, maybe the numbers might have not be that strong, but Voltas has seen a very good rally. From the levels of 800, the stock almost went up to 1500 mark. And because of this, this is again from the monthly time frame. From the technical perspective, it has made a rounding kind of a structure. And this is a very beautiful structure, and the prices are now back to the demand zone. So anybody who has not got the opportunity earlier to take the entry into Voltas is a very good opportunity, because from the monthly structure, I'm pretty confident that we are going to see that 1500 plus on the Voltas. So whatever this current price, 1300 mark, 1300, 1350, and even if you take the stop loss, 50-day moving averages to 1 to 1.3. So I would definitely take from the directional point of view, I would like to take this as a buying opportunity. Maybe trading will not be possible because of the volatility and post result the market Voltas has corrected. Maybe this correction might be there for 1 or 2 trading session, but directionally closer to 1300, I think one should again re-enter the long positions. If the market has to correct and the sector has to go up, Voltas will be one of the pick, and I am confident from the monthly point of view. Rounding structure, rounding breakout has come, and now we are seeing a correction of that particular breakout, which is always a re-entry point from the technical point of view. So I would be taking a buy trade in this.
Confident on Voltas, Brijesh, but what are your picks for our investors today?
So we have to be very cautious and very selective stocks. So Jyoti Laboratory was one stock which saw a very good momentum in yesterday's trade. There was a volume pickup which came yesterday. So I think one can take the long bets in Jyoti with the stop loss of 428 for the price target of 510. Then second one is the Phenolics. This is again a trading bet. One should go long at 283 with the stop loss of 270 for the price target of 308. Another one which is now the stock has not picked up the momentum, but looking at the other parameters and technical reasoning, I believe Narayana Hrudayalaya is something which is going to do some momentum trade, a good amount of trade. So I think one can take a long at the current price, stop loss of 1260 for that price target of 1345.
All right, those are the top trading picks from Brijesh Iyer for the short term, sir. Thank you for giving us time here on News 9. Always a pleasure speaking with you.
Thank you.
But it's time to go for a short break. On the other side, Andrew Holland, CEO of Avendus Capital, joins us.
I try and convert almost everything in a kind of a mathematical formula.
You should always stretch more than you can reach.
Listening is very important.
Because if you don't listen, how would you know what the problem is?
Everybody who's working in and around me, their personal well-being is also responsibility that I carry.
Great leaders have shared vision.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
There's a new video around what deepfake can do.
We have seen a trailer of this a few days back.
Rollers should not be only on the platform.
We'll have to wait and see how those play out.
Hindenburg's report cannot be taken as gospel of truth.
Film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world.
Absolutely. End of the day, we all are like brothers who have mutual respect for each other from a different land.
Watch Allu Arjun on Duologues with Barundas. Streaming on News 9 Plus.
Luxury is now becoming a need rather than something that you aspire to be. So that is adding a lot of fuel. Obviously, government has played a vital role in it.
In a city like Mumbai, a luxury home may be something upwards of rupees 10 crores. In city like Delhi, again maybe something upwards of 8-9 crores. But in Bangalore, we typically define a luxury home, anything which is upwards of about 3 crores.
It's a combination of increased wealth, availability of more luxurious homes, and simultaneously the overall economy doing better.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
Welcome back. You're watching First Take here on News 9, and let's look at the markets because we, Nifty opened slightly lower, but we are hovering in that range as well. Nifty is still defending 22,200 on the downside. It's currently placed at 22,236, and this is as of 10 a.m. this morning, down about 0.3%. Sensex is down 0.3% as well. It's at 73,246 mark. The mid cap and the small cap indices, they are seeing some bit of a recovery this morning. Remember, yesterday we saw a broad-based correction in the broader markets. Out of the 100 stocks in the mid-cap space, about 88 gave negative returns. In the small-cap space, 80 stocks gave negative returns as well. We are seeing some bit of a bounce back over there as well. The small-cap index is up almost 0.7%. The mid-cap index is up 0.2%. And, I think one of the reasons that the market could be approaching its bottom is because, the heavyweight stocks, we are seeing a bit of a turnaround in them, and I am specifically looking at Reliance Industries over here because that had been the major driver for the market, at least on the downside in the last 3-4 sessions. Remember, Reliance Industries corrected by about 5%, whereas Nifty gave up about 2%, but we are seeing some bounce back in Reliance play out. It's up 0.5% as we speak, and maybe that could be that big swing factor that the market is looking for, and that would essentially mean that we have made a temporary bottom or a short-term bottom for now if Reliance continues to rise from these levels from here on. But to share his views on the markets, Mr. Andrew Holland, CEO of Avendus Capital, is here with us. Good morning, Andrew. Thank you for joining us here on News 9. And I want to begin with, asking about this correction. I mean, what do you attribute this recent meltdown to? I mean, is it the lower voter count that is giving investors jitters ahead of the results on June 4th? Because, I mean, if you look at it, the global cues, they have been nothing but healthy in the last 3-4 sessions. Your take, sir?
You're correct. I mean, the global factors should have played in our favour. I think what you've said is well, there's two things behind, I think, the recent kind of fall in the market. One is, as you said, because of the low turnout, there's a lot more speculation than probably there would have been if it would have been a higher turnout, that's for sure. A little bit of jitters around that. And secondly, last time we spoke, I said that the two factors which would help the markets would be the earnings of IT and banking. Now, IT, failed to kind of give us any great hope in terms of the commentary. And of course, with interest rates being kind of delayed in the US, there's no kind of tailwind for the IT companies in India. The banking sector, however, did very, very well, and the NIMS kind of compression that we've been seeing and the pressure seems to be behind most of the banks, and that's why you saw the banking sector move very, very nicely. But then again, the RBI came out with some regulations, regarding construction and provisioning, and that's just again dampened the whole sector. In terms of that's one which could have led the market given its 30% plus weightage in the Nifty, but that dampened it. So overall those factors I think have just played on the market's mind in the last few weeks.
All right, and I mean, it looks like, investors are factoring in a lot of uncertainty going ahead as well, because, India VIX, the volatility index, the fear gauge has spiked from 10 odd levels to about 17.5 now. I mean, election jitters aside, I think the times that we are living in, Andrew, there's a high probability of a black swan sort of an event happening with tensions in West Asia, Ukraine, Russia war, elections here in India as well as in the US. I mean, are you factoring that possibility of a big market meltdown as well? And more importantly, what's the likelihood of this big black swan event sort of a situation happening?
Well, you can never be too sure. I mean, in terms of black swan events, that's why they're called black swan events. You're not quite sure what it's going to be. But with the known factors out there, I think the market's kind of feeling confident that, the kind of Israel-Gaza thing is getting closer to some kind of truce there. Russia-Ukraine continues, and it's not a market-moving event at the moment. Unless that there was a complete collapse in Ukraine of their defenses. So those are the things that the market will keep to watch on. But you're not seeing any movement in oil prices to give you that kind of fear that there's something there. I suppose the one unintended consequences could be if the higher rates for longer in the US, would that have any impact on the commercial real estate at some point? As we've seen in the banking sector there, the regional banks had some real problems. So the longer the rates are higher, the more you can have the possibility of unintended consequences. But the market's not worried about it at the moment. So, it's hard to kind of measure the fact. The one thing that I would say is that, the market after the elections will focus very quickly on the budget. And of course, there's more and more rumors swirling around about capital gains tax being increased, increase in tax for, say, arbitrage funds, and so forth. So that might be something that the market will get a bit more jittery about after the elections.
Andrew, good morning. We talk about the higher for longer sentiment setting in, but there is another thing that has happened in the last few months, and that is the yen sliding to an all-time low. Dollar has strengthened and the long positions have risen to all-time highs in Japan. Indian rupee along with the peso, the carry trades are most affected by the movements in the yen. Do you see that as a problem when it comes to carry trades and the export volumes and with respect to the Indian rupee?
Not to that extent at the moment. I mean, if you're a Japanese investor, it's been a great year or so, right? You've had depreciation of the currency and markets move higher for you, so it's been a great trade. But the Japanese central bank there is not really rushing to kind of increase interest rates. Despite the fact that the currency is depreciating. So I see them. They did take some action last week, as we saw, and spent quite a lot of money doing so. So I think they'll play at the edge. I don't think they're gonna really kind of see a big appreciation in the currency. I don't think they want that either. So I think that the rupee, if anything, will probably strengthen from here, given our inflows for the bond funds coming ahead, and the fact that the economy is doing very well. So I'm a little less worried on the kind of rupee at this point.
All right, and Andrew, speaking of the fourth quarter earnings season, I mean, you spoke about IT and banks. A lot of the sentiment was pivoting on that, and at least for now, it looks like there are no tailwinds for the IT sector. The banking sector, I mean, the pressure was supposed to be there as far as NIMS is concerned, the net interest margin, but that wasn't as as much as the market was anticipating. But that aside, it seems that at least in this time around, the street is focusing on the guidance a lot more, and at least if there is a big turnaround plan in the offing, and I'm talking about Tech Mahindra here, I mean, the results were like really bad, but the commentary, at least from the new CEO, was that we are focusing on a turnaround plan over here. So the street was really happy with that, and on the back of it, we saw a rally in Tech Mahindra. On the other side, Bajaj Finance, the numbers were decent, but the commentary was not anything that would inspire confidence. I mean, do you think that first, what's your assessment of the fourth quarter earnings season, and second, do you think that the market, the sentiment is focusing on what's going to happen tomorrow than what the companies they have to show for now?
Yeah, so the results season has been quite interesting. I mean, excluding IT and banks, as I've just mentioned that, by and large, I think earnings are around 12% to 13% higher, which is in our range of 10 to 15% earnings growth for the year. So no big surprises on the upside. If anything, you see more downgrades to earnings by analysts over the past few weeks. And of course, anything that misses the target, because ratings and valuations are where they are, you're seeing a big fall in the share prices. So that's where we are. I don't think that the only surprise factor has been the FMCG companies, and maybe because they have been so unloved, no one expected anything to happen in terms of volumes or margins. It's been a nice positive surprise. So if you're thinking, going back to our previous chat about kind of volatility in the markets, if you want to hide somewhere, maybe FMCG is the place to hide rather than IT at the moment, because at least you're getting growth. And of course, the market's now thinking that rural economy is going to start picking up, and that will aid to the FMCG earnings going forward. My take is slightly different. I don't see those kind of rural numbers picking up so swiftly, and I still stick to the theme of premiumization, which works within the beverage industry in particular.
All right, Andrew, please stay with us. It's time to slip into a short break. We have plenty more to discuss with you on the other side.
Why is the state not looking at putting an embargo on that?
As a Telangana person, I will not accept.
How do ordinary folks deal with this?
For the very first time in our investigation, we unmasked the killer of Ravindra Matre.
In 5G, we have to stand with the world, and in 6G, we have to lead the world.
Winning a Grammy was an absolutely surreal experience.
Golf as a game, it is closest to the game that you call life.
You've got to use your mind. You cannot lose it.
The sharpest person is one who understands his limitations.
खुद ही को कर बुलंद इतना कि खुदा बंदे से पूछे कि तेरी रज़ा क्या है.
You might have a bad break after a good shot. You might have a good break after a bad shot. But the fact remains, you got to play the ball from where it lies.
Watch Jeev Milkha Singh on Duologue with Paruntas, streaming on News 9+.
Welcome back. You're watching First Stick here on News 9, and before we slipped into the break, we were talking about the FMCG pack and how that has been one pocket of the market that has provided some sort of a support in a market that is falling. Remember, Nifty FMCG actually has been on a rising and has acted as a true defensive in this fall. Andrew, I'll come back to you. You were talking about that. Of course, FMCG has been a space which has given investors some comfort in this market that is falling. But we are reading some expectations that the monsoon is going to be better this time around. But as you also pointed out, we are not seeing any green shoots of recovery as far as the rural demand is concerned. But a broader play, I feel, is that this consumption theory. Do you think consumption, the consumption space particularly, do you think that could be a theme that, investors could play for the next few quarters, sir?
I think it's a theme that you have to play over just many quarters, to be honest. The way I'm thinking about the whole, let's just take after the elections. I mean, obviously, we know three things are going to happen. The government's going to spend on defense, renewable energy, and railways and infrastructure overall. So that's the good news, right? So those themes don't go away. I'd play the infrastructure slightly different. I'd play it more through this, kind of the smart manufacturing, smart cities. So the kind of, lends itself to the ABB, Siemens of this world, which are more geared towards that than just pure construction. And then the theme that in terms of consumption is premiumization. As you get, $2,500 per capita GDP, people move up the curve, and we're seeing that already. And you have a young population who are willing to kind of try new and different things. And I think that runway is a very long runway. So beverages, if I'm playing consumption, I'm playing beverages because I think there's going to be a lot more growth going forward, better margins and higher profitability.
All right, Andrew's betting on beverages in this consumption theme. Sir, but before we let you go, the markets have come quite significantly off their recent record high. We are down about 550 points. At a time like this, when the markets are feeling the heat, the investors are jittery, especially ahead of the results on June 4th. What would be your advice to retail investors? What should be the strategy that they should follow, after elections, especially moving into the budget season as well?
So listen, we know that there's certain sectors, I mentioned a few of them, which we know the growth is going to continue to be there. Electronic manufacturing sector is another sector. These are themes that are not going to go away very quickly. So those are the companies you should add. If you're looking at investing at the moment and you feel that, the market's a little bit too volatile, wait. I mean, there's no harm in waiting a few more weeks for the election results to come through, and then deploying, in terms of the manifesto, in terms of what is the government going to be doing, where they're going to be spending money. You could just go with a little bit more clarity if you wanted that comfort level.
All right. If you are seeking that comfort level, maybe wait for some bit of time. The election result is less than a month away, so maybe you'll get some clarity that you are seeking, and then maybe re-enter markets. The markets, they have definitely come off from their recent peak, so maybe there is some bit of a valuation comfort as well. Sir, thank you for giving us time here on News 9. Always a pleasure speaking with you.
Pleasure. Thank you for the opportunity.
But remember, we are in the middle of the fourth quarter earnings season as well, and we have two big companies lined up today, Hero MotoCorp and L&T. I'll come to you, Amit. Hero MotoCorp, a big day for auto major, not just Hero MotoCorp, TVS, Bharat Forge are also coming out with the numbers. Let's start with Hero MotoCorp. What are the street's expectations from the two-wheeler major?
In the quarter gone by, now they have had a 10% jump in sales volumes. They sold 13.92 lakh units. So the market is expecting a revenue jump of almost 13% up to 9,383 crores, up from 8,306.78 crores the same quarter last year. Net profits are expected to jump close to 20% up to 1,024 crores, up from 858.93 crores the same quarter last year. EBITDA too is expected to jump over 15%. So that is the review on Hero MotoCorp. The downside is that even if you look at the script the last 5 days or the last 1 month, it has been in the negative. It was 2.51% more than that till yesterday evening in the negative. Last 1 month, last 5 days also it has been in the negative. Has not gone up much today itself. So that is the downside. Probably it is the sector, probably it is pre-elections, probably it's the market that is basically correcting.
I mean, I'll give another theory, Amit, because the kind of rally that we have seen, especially in the two-wheeler segment, especially on this theme of premiumization, I think some bit of a profit booking is warranted. Remember, the markets are also following. We are seeing some bit of a correction. But just to put things into perspective, Hero MotoCorp has delivered returns of over 70% in the last 1 year, and this is on the back of a big rally that we have seen play out in automobile space, especially in the two-wheeler segment. I mean, look at the other peers. Bajaj Auto, that's been the best Nifty 50 stock in the past 12-15 months. It has delivered returns of about 90-91%. Eicher Motors, which has been a laggard, known for its Royal Enfield portfolio, that has given result returns of about 37%, and that's something to say when you're calling it a laggard. I mean, it has still outperformed Nifty. Another one, TVS Motors, returns of about 61%. So some bit of a correction is warranted. Remember, the markets, I mean, you don't want a stock to go up just one way. You would want some profit taking along the way. So, weak hands leave the market, and the conviction stays. The holders that want to stick along and want to ride this thought process that the market is shifting towards premiumization, and that would bode well for these two-wheeler companies. They will continue sticking around and keep driving the markets higher. But again, two-wheeler space, it will be buzzing today. We not only have Hero MotoCorp, but TVS will also come out with its report card. So will Bharat Forge. So keep an eye out on that. But with that, it's like time to slip into a short break. On the other side, we'll talk about Larsen & Toubro, that is also expected to deliver its Q4 returns in today's trading session.
We are trying a lot of experiments, innovations and ideas.
We came out with a new format in audio, which is audio series.
Listening for content-oriented company in India, which is a very unique proposition.
When you look at audio in general, we had music, which is like extremely old format, and then we had podcast.
A natural extension to Pocket FM is to move from Hindi to regional content. I think I'd love to see their FY24 numbers, which they claim will be close to 1,000 crores. I think there are talks of them to raise another $80 to $100 million of funding.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
20,000 people dead and counting. What's happening in the United States of America is unprecedented. You will have to pay for this.
Welcome back. You're watching First Stick here on News 9, and we are talking about the earnings season. We were, before we slipped into the break, talking about Hero MotoCorp that will deliver its Q4 report card today. Another company in the pipeline is Larsen & Toubro. Amit, what are the expectations? I mean, looking at it and reading the brokerage views, they are expecting a strong quarter. Tell us about it.
Very strong quarter given what has happened in the last few quarters. Strong construction activity, momentum in new orders in international hydrocarbons, mobility in power transmission and distribution businesses. So all have added up, but it's basically mostly the construction activity that has picked up. Revenues are expected to rise more than 12% to 65,497 crores, up from 58,335.15 crores the same quarter last year. Net profits are expected to rise close to 10%, 9.8%. The major analyst firms' averages taken here, up to 4,380 crores, up from 3,986.78 crores the same quarter last year. Strong results for L&T, but again, when we look at the stock, whether it is the last 1 month or the last 5 days, it has been in the negative. Last 1 year, it has gained posted gains of over 43%. But last 1 month, and that has been an elongated cash out period, if we call it that. It has been in the negative. Last 5 days, it's been in the negative. Not much improvement today either.
All right, as we speak, L&T is down about 1%, so maybe investors are seeing some bit of jitteriness ahead of the results. But we'll shift focus now to the primary markets, because 2 initial public offerings will open for subscription today. That is TBO Tek and Aadhar Housing Finance. Let's start with TBO Tek first. Founded in 2006, TBO Tek is a leading travel distribution platform that allows its suppliers such as hotels, airlines, etc. to display and market inventory to the large and fragmented global buyer base like independent travel agencies, advisors, tour operators, among others. For buyers, TBO Tek serves as a one-stop solution for exploring travel options for worldwide destinations. As of December 31, 2023, the company had sold over 7,500 destinations in over 100 countries. The IPO opens for subscription on May 8, which is today, and will close on May 10. The price band for the issue has been fixed at 875 to 920 per equity share. The 1,550 crore issue is a mix of fresh issue of shares worth 400 crore and an offer for sale of about 1,150 crore. The company will spend the fresh issue proceeds worth 260 crore for its growth and strengthening its platform by adding new buyers and suppliers. Further, 40 crore will be utilized for unidentified inorganic acquisitions and the remaining funds for general corporate purposes. Moving on to the valuations, the stock is valued at a price to earnings of 54.8 and price to book of 11 times compared to its peers median and average of 61.6, that's for PE, and 5.6 for your price to book. In FY23, the company witnessed a whopping 340% jump in profit and a 120% increase in its revenues. What's even more impressive is that in just the first 9 months of FY24, that is till 31st March of 2023, the first 3 quarters, they have already exceeded their profits from last year and brought in over 1,000 crore in revenues. Among key risks that you should keep in mind, the company has concentration risk as 68% of its revenue come from its top 5 suppliers. Also, TBO Tek's operation is highly dependent on hotel and airline industries, and I mean any downturn in these industries will significantly impact its businesses. Another mainboard IPO that will open for subscription is Aadhar Housing Finance. Backed by Blackstone, Aadhar Housing Finance is India's largest low-income housing finance firm. Aadhar Housing Finance focuses on low to middle-income clients who require small-ticket mortgage loans. It currently provides housing solutions to segments of customers whose monthly income is between 5,000 rupees to 50,000 rupees and beyond. As of December 31st, 2023, the company's average loan ticket size ranged between 9 lakh and 10 lakh with a loan to value ratio of 58.3%. It also has the highest asset under management among its peers as of the same date at 19,865 crore. The 3,000 crore IPO, which opens on May 8 today till May 10th, is a mix of fresh issue worth 1,000 crore and an offer for sale of rupees 2,000 crore. Aadhar Housing Finance is expected to use the money to meet its capital requirements for onward lending and general corporate purposes. The price band has been fixed at 300 to 315 rupees per share. And let's also talk about the financials, because for the first 9 months of FY24, Aadhar Housing Finance had a net profit of 548 crore, up from rupees 404 crore in the corresponding quarter of the previous year, in the corresponding 9-month period actually. For the whole of FY23, Aadhar Housing Finance had a profit of 544.7 crore as against 444.8 crore in FY22. Net interest income, which is the difference between interest earned and interest paid, was 948.5 crore for the first 9 months of FY24 as against 713 crore in the 9 months of FY23. So those 2 IPOs are opening today and they will be open till May 10th. So keep an eye out on that. But on that note, that's it. That's all we have in this edition of First Take. Thank you for watching. We'll see you at 4 p.m. on Last Take. Coming up next is World Business Report.
You were the chosen one to direct Mr. Bachchan for his first endorsement, for his first appearance on the small screen.
It was a life-changing moment.
Have you been a rebel with a cause?
There was a sense of